But at this point, when you hear the media talk about all of the big tech companies like Google with their tensor processing units, or Meta or Microsoft, all doing these custom silicon designs, it's actually two primary players that are behind the scenes making all of that happen in the first place.
Hey, everybody, welcome back to Chipstock Investor. We're here to update you after Marvell Technology did their most recent earnings report. And if you recall, we did a video not so long ago about our decision to divest ourselves of Marvell Technology. So we're going to go through the earnings call, talk about whether or not that still holds true for us or whether we've changed our mind. Before we jump in, make sure you hit that subscribe button. That helps us out a lot. Free and easy way to support us here at Chipstock Investor. Nick, let's first start by talking about where Marvell Technology fits into the semiconductor industry as a whole.
So Marvell is, of course, a fabless chip designer. They design the chips and then they utilize companies like Taiwan Semiconductor Manufacturing, just there to the left in the lighter colored pink, chip fabs and contract manufacturers, to actually make the chips that they've designed. Marvell is also a top holder of IP, intellectual property, on all sorts of chip designs and patents. We'll talk about that momentarily, how Marvell arrived at this point. But here is the previous quarter's revenue breakdown. And much like everyone else in the semiconductor industry, Marvell has been in a pretty serious downturn. The bear market did not end for the semiconductor industry at the end of 2023, was not expected to come to an end in the first quarter of 2024 either. For Marvell, this Q1 fiscal 2025, which is basically the 3 months that ended in April. Of course, all things data center AI is keeping things chugging along, but you can see 3 months ago, we were expecting some pretty serious downturn in the rest of the business.
And that's exactly what happened for everything except that data center revenue segment. That segment actually came in at a little bit higher. They actually had a 7% quarter over quarter increase for that segment, clocking in at $816 million, 87% year over year increase. And they expect that to continue into the next quarter, mid-single digit increase in Q2 fiscal year 2025. But the rest was pretty ugly.
Now, there is one upshot here, and that is, of course, it does look like Marvell has hit bottom. Finally, it has been a really rough 2-year stretch for this company. So as we near the second half of calendar year 2024 or fiscal year 2025 for Marvell, it sounds like this is the inflection point. The rest of these markets expected to return to growth mode again on a sequential basis, quarterly sequential basis, the second half of this year. So that's the good news. We'll circle back to the guidance again, but let's maybe talk about the profit margins and earnings a bit. Not a surprise with revenue down again year over year, about 12% year over year, which notably last year in Q1 fiscal 2024, revenue was also down almost 10% from fiscal 2023 or calendar year 2022. It's been an ugly, really forgettable 2-year period for companies like Marvell. Revenue continued to decline. It hit profit margins, and you can see that reflected in earnings per share. Upshot here, though, free cash flow does continue to make a comeback on a year over year basis. We had the big surge in free cash flow in Q4 3 months ago. That's kind of a seasonal thing, but on a year over year basis, free cash flow back in growth mode. So all good stuff as far as that goes. Ultimately, at the end of the day, the story here surrounding Marvell and what has a lot of investors rightfully excited about the business is that data center AI opportunity. These other parts of the business should begin to contribute to growth again. Enterprise, non-cloud data center, and on-campus compute, 5G networks, automotive, all those things are still positive end markets for Marvell. Marvell definitely riding the coattails of the AI market that NVIDIA has helped spawn. Now, Casey, we didn't give Marvell a very good shake. NVIDIA, of course, had GTC in March. We talked about Broadcom's AI event, which was actually the very same week as NVIDIA's GTC back in March. We did a video on that a couple of months ago, but we did not talk about Marvell's accelerated compute presentation they had a couple weeks after NVIDIA and Broadcom did. This helps explain a little bit about how Marvell got to this position now as a big name in fabless chip design and IP and patent control over lots of different technologies that feed into this data center and AI market.
Marvell Technology has made a series of acquisitions that have brought us to this point in the semiconductor industry where they have this very large data center segment. You can see that they made a acquisition of Cavium back in 2018 that had multi-chip and processor security segments of their business. And then various other ones you see, Avera Semi, Aquantia, Inphi, and Innovium. And all of these companies help make Marvell Technology a more well-rounded fabless chip designer. They design analog chips, they design some packaging, and then also the digital connections made in things like the data center.
And ultimately, that really strong IP portfolio is why we've come to call or refer to Marvell affectionately as baby Broadcom the last couple of years. And just like Broadcom is getting a massive upward lift from data center AI, and especially as a lot of customers are looking for custom compute solutions. So we've talked about Google, Meta, Microsoft, Amazon, you name it, all of the big cloud infrastructure providers, they're all looking for some custom application specific integrated circuit design. And because of all that IP, Marvell is able to participate in this, both on connectivity, networking, and custom compute. They talked about the massive opportunity ahead for these particular segments that they can address. Last year, something in the order of 21 billion in data center sales that Marvell could address. They think it's headed to 75 billion by calendar year 2028. And they're looking to either gain or maintain market share as that part of the semiconductor industry and market increases. And again, broad IP that encompasses everything from an XPU, an accelerated processing unit. For some more details on what that is, see that Broadcom video that we did a couple months ago on the connectivity side, switching and interconnect, and then storage controllers. So the actual device that controls data going into and out of memory chips and memory storage devices in a data center.
This slide from Marvell helps illustrate all of the connections that need to be made between all of these different devices in a data center server room. You can see the front end network has to be connected to the AI server that has to be connected to the back end network. And that's where all of these optimized Ethernet connections come into play. You can see that they picked up this business from their two companies, Inphi and Innovium. You see at the far right under digital, DSP optical or DC switch. Those two connections you can see are divided between either optical module or a silicon photonics module. On the top left of the diagram, they have a few different components that they have. And then silicon photonics, they actually have more components in those connection devices. But ultimately, both of these modules used to connect different parts of the data center to one another and help transmit data.
So that's on the interconnect side. Then we move to the actual Ethernet switches. You can think of a special purpose type of server full of these Ethernet switching chips. These are the Terralinx family of chips from Marvell used for these custom Ethernet switching devices. And these switches you can think of as like the on-ramps and off-ramps of the data center, helping coordinate all of the data traffic moving around. And then finally on the compute side, so they picked up some general purpose CPU business with some of the acquisitions back in 2018, Cavium that you mentioned earlier, Casey. But then on XPUs, the accelerated processing units, this is where we get into the custom design part of the market, or application specific integrated circuit, or ASICs. We did another video on that a couple months ago when we were talking about NVIDIA getting into this market. But at this point, when you hear the media talk about all of the big tech companies like Google with their tensor processing units, or Meta or Microsoft, all doing these custom silicon designs, it's actually two primary players that are behind the scenes making all of that happen in the first place. It's number one, Broadcom, and number two, Marvell Technology. Just going back to the acquisitions that Marvell has made over the last 5-6 years, they built out a broad portfolio of IP so that they could go to these big customers and say, hey, we know you have very, very large, very, very specific workloads in your data center. We can help you design a custom chip to optimize performance of that specific workload.
We'll go back to Marvell's segmented numbers here for just one more moment. You can see that their expectations are mid-single digit percentage increase for data center. They expect enterprise mobile carriers, which is the 5G networks, and automotive industrial to be flat next quarter. You may notice this increase in the consumer market, around 100% increase. And that is primarily gaming consoles, PS5, Xbox. Those went through an inventory correction over the past couple quarters, and now we'll be picking back up. But ultimately, Marvell is deprioritizing this segment of their business. Let's take a look at what that means for earnings per share growth and profit margins in the next quarter.
Yes, and this is really important. This is what's ultimately fueling our decision to deprioritize Marvell in our portfolio in favor of some other chip stocks. So data center and AI, absolutely a fantastic growth market for Marvell, and could be for at least the next couple of years, if not more. The problem is the rest of that business is just, it's been hit so hard, and we're still not quite out of the bear market yet. It sounds like we've possibly hit a bottom and things are going to begin to recover, but you can see 8% quarter over quarter growth expected in Q2 fiscal 2025. That's the current quarter that will end in July, but still down 7% year over year, and certainly down a bit more than that from 2 years ago. One of the original reasons we purchased Marvell stock going on 6 years ago was we thought, as they started making these acquisitions under the current CEO, Matt Murphy, when he took over, that they would be able to integrate these businesses and unlock a lot of synergy, higher profit margins. It certainly worked out for the data center part of the business, but not so much for everywhere else. So you can see earnings still a bit meh for Marvell at this point. So that's where we're at. We're at the bottom of a market. We're selling at the bottom. We told you a month ago that we would probably sell half of our Marvell stock and reposition it into Marvell's bigger peer, Broadcom.
Yeah, exactly. And I guess that answers the question I posed at the outset. Are we following through on that plan? And yes, we are. This ultimately came down to, why diversify into this smaller business when we could own the leader in this space?
And to be fair, while there is a lot of overlap between Broadcom's revenue segments and Marvell's, they're not exactly the same. So Broadcom's networking segment is roughly what corresponds to Marvell's data center segment. Both companies play in storage connectivity, broadband, that's Broadcom's wired and wireless networks, including 5G business. Industrial, that's Broadcom's, where they put their automotive and other industrial equipment business. But then on the consumer side is where things deviate a bit more dramatically. For Broadcom, their consumer business is mostly Apple wireless. They're a big supplier for Apple's 5G connectivity chips. And then obviously the really, really big deviation is that infrastructure software segment, which Marvell does not have. And Broadcom has accumulated that via acquisition the last few years, and then that's culminated with the more recent VMware mega merger, which is now expected to continue to grow sequentially each quarter this fiscal year for Broadcom. The end result of that, as we explained in our last Broadcom videos, is Broadcom has remained in growth mode throughout the bear market and is just sustaining its growth into calendar year 2024. Thanks to the AI surge, they are hitting some soft patches with the rest of their business, just like Marvell. But then you layer in the software, really, really high profit margin software business, and it adds up to, although it's a bigger company, we think bigger doesn't always mean slower growth, and smaller for Marvell doesn't always mean higher growth. This is the rationale why we've begun consolidating our portfolio around Broadcom.
And what does that look like? It looks a little something like this. Instead of a dollar cost average buy, we're doing a reverse dollar cost average where we will take a small portion of our shares of Marvell and sell it over time. We did sell half of our position in Marvell already. We purchased Broadcom at that time, when it was under $1,300 a share. And now over the next 3 to 6 months, we'll do this reverse DCA of our Marvell Technology until we've gotten out. Nick has made a pretty decent case for me for selling Marvell Technology. So we're going to go with it.
And also, besides consolidating into Broadcom, I know you like to nibble on a bit more Dutch Brothers stock.
It's true. When I wanted to nibble, though, it was a lot cheaper than it is right now.
Yeah, you were correct. It's on the record, folks. Casey was saying we should probably buy Dutch Brothers stock when it was a lot lower than it is now. Where was it a couple months ago? Well under $30. Anyways.
I've got other stuff I want to buy. That's why we're selling Marvell.
That's fair. Okay. Remember, folks, our primary way that we accumulate cash to make purchases, though, is by saving, not constantly selling. So we tend to make small and gradual moves in adjustments in our portfolio, and this really is ultimately one of those. If you want Dutch Brothers stock, you're going to have to save more money, Casey.
By spending less on coffee. All right, everyone, thank you so much for watching today. We really appreciate your support. Make sure you hit that subscribe button. If you're interested in our show notes, video notes, published manuals, and Discord access, check out our membership below. It's just $5 a month, which is cheaper than that coffee at Dutch Bros or Starbucks or Dunkin', wherever you go. We'll see you all again very soon at Chipstock Investor.